Welcome to Stocks Review. Today we are going to take a look at Realty Income. Stock ticker symbol O. It is headquartered in the USA and service regions, majorly in the United States. The service region may give us a clue of the company's overall stability and long-term growth potential. It has a market cap of $41 billion and is considered a large cap company. The market cap is an important metric because companies with larger market cap often have more pricing power, liquidity, and lower failure rate, whereas companies with smaller market cap tend to have more growth potential. It is in the real estate sector and REIT industry. Realty Income, also known as the monthly dividend company, is an S&P 500 company dedicated to providing stockholders with dependable monthly income. The company is structured as a REIT, and its monthly dividends are supported by the cash flow from over 6,500 real estate properties owned under long-term lease agreements with our commercial clients. To date, the company has declared 608 consecutive common stock monthly dividends throughout its 52-year operating history and increased the dividend 109 times since Realty Income's public listing in 1994. The company is a member of the S&P 500 Dividend Aristocrats Index. In short, it is a retail REIT with diversified property portfolio and monthly dividend. It has a 5-year compound annual revenue growth rate of 13.5%. The revenue growth is consistent and the revenue trend looks very strong. The revenue trend is important as growing companies often have sales go up first followed by profit growth. The adjusted fund from operation is growing. It has been issuing more shares in the recent years, probably to fund its growth. It has a nice dividend and has been steadily growing its dividend throughout the years. The overall shareholder return of Realty Income is quite good and slightly outperforms the historical performance of the SPY. Realty Income has a 28-year total return of 4,813% with a 28-year compound annual growth rate of 14.8%. If you had $1,000 invested 28 years ago, you would have $48,130 now. Currently, the price is at around 69 with a 52-week high at 75 and 52-week low at 62. It is near the middle of its 52-week range. It has a price to AFO ratio of 18 and forward price to AFO ratio of 17.5. It has a cash position of $157 million and long-term liabilities of around $17 billion. Realty Income is considered a no-moat company according to Morningstar's rating. Currently the margin is 18.9% and future margin after 5 years is expected to be 23.3%. The margin is expected to be increasing a lot after 5 years. Now, about the future projection. It has a 5-year forecast revenue compound annual growth rate of 17.7% and 5-year forecast EPS compound annual growth rate of 6.6%. The near-term growth is expected to be good. It has missed all of analyst consensus EPS estimates in the last 4 quarters. That's a disappointing performance. The overall analyst recommendation rating is a hold with trend shifting towards hold recently. Out of 16 analyst 1-year price targets, the range is 68 to 86 with an average price of 76, which is slightly above the current stock price. Since Realty Income is a REIT, we present 2 models for valuation based on book value and adjusted funds from operation. If we run the book value model, the fair price is 81 with an upside of 17%. If we run the adjusted funds from operation model, the fair price is 80 with an upside of 15%. Now we compare Realty Income with U.S. Treasuries and SPY. Currently, the 10-year Treasury yield is around 2.74%. The return yield of SPY is at around 10%. The SPY has an average forward PE around 17.5 now. Realty Income has a dividend plus 10-year growth forecast plus shares buyback yield at 10% and a forward AFFO around 17.5. We have to be cautious that this is just a rough prediction of Realty Income's future performance. The forecast can be changed at any time, and the actual revenue or net income the company is able to get depends heavily on the true market condition. Looks like Realty Income is in line with the valuation of SPY. We will try to summarize all the information above to give us an overall impression of Realty Income. In summary, Realty Income is a large cap stable company with good growth and no moat, and probably at around fair value now. Realty Income has both real estate and retail exposure. Real estate may be a good hedge against inflation, however, when the economy is hit by inflation, there is risk of vacancy rate going up. Overall, it may be a good diversified REIT holding long term. Now that's a review for Realty Income stock. Click the subscribe button for more up-to-date stocks review. If you like our content, leave us a comment and click the like button to give us some support. We hope to see you next time.